All right, good afternoon, everybody, from beautiful Colorado. Just beautiful blue skies out there. Finally feeling a little bit like spring. It will still snow again and be cold, and we always get the April Fool's Day storm is usually the last snowstorm of the year, which is April 1st. So, but it feels like spring today. So, anyways, excited after a day in the market. Thought I'd do a little cocktail and a recap since it's my day off from the gym. And anyways, had trades on two tickers today, INO and AIM, and pretty simple trading. Things are trading pretty clean right now off the pivot points. I do plot pivot points on my charts. As I guess I'll walk you through how I set up my charts. I have MACD, volume with RSI. I'll scroll in here. The red line is the 9 EMA, yellow line is the 50 EMA, and the white line is the VWAP. So, anyways, I was targeting INO this morning. Let's see. Let's go back to this morning here where it opens up. It opens up in really kind of a tricky, trappy front side here. And I avoided that front side. I'm glad I did because I'm not really much of a front side trader. If you are, that's great. It's really not what I'm good at. So I sat back and watched for this. Watched this spike. It actually, let me zoom in here a little bit. It was really choppy in through here, but it broke through the 830 level, came up to 922, and then crashed back again, and then back to the 922, all pretty quickly. And I was just sitting here watching this. I didn't get any shorts in on this first spike, so I targeted this second spike, which was a little bit later, but it came back and it tested the R2. And I had been looking at it from before. I wanted to see what it was going to do when I got back here. And so I started looking to get in short just below 922. Had first short entry at 914 and then adding at 895. And then I covered at 880, which would be, let's see, right here. And then as this came back up, I went to size at 888. That's where I got in. So, and that was a really nice ad. That worked out really well going to size right before this big crack in here. So I started covering at 844 at the, let's see, VWAP was at 863. I was targeting 833, and I had some slippage because I have 844 from my actual price. So it looks like I had some slippage in there. So, most of the meat of the move in through here, always, if I can get my entry in this top box, and a real tight stop in here, then I know that I'm going to get the meat of the move, and I'm going to target down here. And if I get some slippage out of this bottom box right in here, that's pretty normal, but I'm targeting the meat in the move, right, meat of the move right here in the middle. So that was INO. That was a pretty simple trade. Trading pretty clean off the pivot points. Has been. I really wish I would have banged that 730 bounce right here because I was targeting this one, and then I missed it and I got distracted with some other stuff. But normally, I'm looking to short here, and I'm looking to cover, and I am looking to catch. If I get an overextended perfect bounce to a bar like the 730 bar I've been watching for a couple days, then normally I'm gonna go in long. But so I like to get my short in here and then a long in here, and I really like to short the fades. This one we didn't get much of a fade. It held just kind of a fairly tight channel there between that 750 821 area. But that was a pretty good short to start the day off. Okay, another thing on this. And I don't know how well this screen will pick it up, but what we'll do is we'll go ahead and see. But really, you've got some really bearish RSI coming in here right at the exact same period. So here's the top of the RSI right there. So RSI has peaked here on this first spike, okay, at 924. When this comes all the way back at 924, we've got a lower RSI. We're way down in here. RSI has been dropping on a steady trend line. And that's really the way I use RSI with technical analysis, more so than I do in respects to like overbought or oversold conditions. I look for lowering resistance and support levels of RSI, and I really look for bearish divergence. So on to AIM. And the cocktail is Florida Caña. It's just a 5-year aged Nicaraguan rum. Super good with the Mexican Coke with the real sugar. Always with the Mexican Coke. So hear me crunching on some ice, that's what it is. So yeah, let's get in here on AIM. AIM was beautiful because same thing, trading real clean off the pivot points. You know, the R3 area is really one of my more preferable places to short from. Usually I'm shorting from the failure of the R3. Today I was shorting from above just because, man, there were so many tops and tails up here, you know, showing all kinds of weakness that I was just ready to jump in. So, great name for a boat too. Maybe that'll be the next name of my next boat, Tops and Tails. So, because that's just what I love about the market is finding those tops and tails of weakness. And so I got in actually at 281 here. And that was nice. Normally, I don't have an entry that good. Normally, I would be entering down here, like 267 if I was real tight. But I'm looking at the break here. But look at this down here. Same thing. You know, we've got a really strong bearish divergence. And same thing. The RSI here on AIM is higher here than it is here. So when you've got bearish divergence, that's one thing that really cues you into weakness. You're seeing the weakness in the candles. You're seeing the weakness in the RSI bearish divergence. You're seeing the weakness in the descending volume right here. And then you've got a MACD signal line cross. And, you know, any single indicator or, you know, on its own, there's a, sometimes it's like the holes in the net are bigger than the fish in it. You know, like the indicator is really not, it's nothing that can be relied on all the time. But when you have a good mix of indicators that really work well together, you can do really good, proper technical analysis. And you don't have to get crazy about it. I love when Deck does his imitations of the person doing the, you know, just the completely overblown technical analysis. And I can't talk that fast, you know, like he can't when he does it, you know, but really good, strong technical analysis is nothing to be afraid of, guys, you know. So that's what it is, you know. When I'm seeing things line up, I've got MACD signal cross, I've got volume descending, I've got bearish RSI divergence, I've got an overstretched junk stock that's trading really cleanly off the pivot points, and it's up here at the R3, and that's a trade I'm going to take over and over and over and over. And it doesn't matter if I get stopped out on other times. You know, if this was the trade here and my stop was too tight, you know, and I got stopped out here, and it went on or something. Say it wasn't that the stop was too tight. Say this keeps going and I get stopped out. It doesn't matter. I'm going to take that trade 10 out of 10 times. I have to take that trade 10 out of 10 times. And when I do, it's going to prove itself to be profitable about 6.5%, 7%, you know, 6.5 or 7 out of 10 times at a very minimum for myself anyways. So when I stop out on those, you know, 2-3 trades out of 10, maybe 4 trades out of 10 even, that just gets me quicker to my profits. So, you know, be excited about that. Be excited about stopping out properly on well-planned trades, you know. But anyways, none of that happened today. I had no stop outs actually today, and usually that's pretty rare for me because I'm a scalper. So I tend to get stopped out a couple times until I find the right entry or or tighten my game. So, anyways, that's a little bit about what I was thinking, what I see, how I approach technical analysis, how I approach where I'm shorting. So maybe that helps you learn the short side, and maybe that helps you as a long trader. But I would really encourage you to find what a very as small of amount of indicators or technical data and technical analysis as possible that works for you. For me, this is what works, and it just helps me have a consistent ability to spot weakness. And I'm just a trader that's better at spotting weakness than I am long. I'm a decent long trader here on the bounce. I tend to avoid these front sides. They tend to be tricky trappy. I'm not good at them. And if I get real turned around here on the front side and I lose a lot of money, it's going to screw up the rest of my day. So I don't do it. I'm a shorter. I don't have that herd mentality. I'm going to wait in the bushes. I'm going to spot weakness and I'm going to pounce, and so this is my entry here. Consistently, when I do take my longs, they tend to be here. I tend to call this pump, dump, bounce, fade. And this is a perfect example of pump, dump, bounce, fade. And it takes a lot of different forms, and sometimes the bounce is higher than the pump, sometimes it's lower. For me, when it's absolutely perfect, it dumps below the VWAP, bounces back, fails, and fades. And that's where I short on the VWAP. But learning this pump, dump, bounce, fade, and learning to trade well where you trade well. Learn where you trade well, really. But for me, I know I suck here. I'm really good here. I'm average to barely above average here, and I'm really good here. So short, long, short. And when you start getting these that are trading clean off pivot points and trading clean in a pump, dump, bounce, fade pattern, I don't leave fish to find fish. I'm going to stick with that. And you'll find me long and short on the same stock. So anyways, that's it. If you got any questions, hit me up. Any of this, helps you out, let me know. Any thing I should really do to improve on, I'm sure I've got a lot of comments I could get there. But, if there's anything you like to see me maybe even cover, let me know. So anyways, good night, everybody. Trade green, and I'll see you tomorrow in the chat.